Hey traders, welcome back to the channel. Everyone's always looking for that one secret to beat the market. But what if I told you it's not about secrets? It's about mastering the fundamentals. Today, we're diving deep into the world of trading and uncovering the 25 essential rules that separate the profitable 10% from the rest. Imagine this, the sun's first rays, your trading desk ready, charts glowing. You're not just trading, you're mastering the market. These are the rules that can change your trading game, help you manage risk, and put you on the path to becoming a consistently profitable trader. So buckle up, grab your notebooks, and get ready to transform your trading journey. Trading is like a blend of art, science, and a serious mental game. It's about psychology, about understanding your own reactions and mastering them. Rule number 1. Don't try to control the market, control your reactions. The market is a wild beast. It's unpredictable, it's emotional, and even the most seasoned traders can't predict its every move. Instead of trying to tame the beast, focus on yourself. Understand your risk tolerance, your trading style, and your emotional triggers. When you're in control of your reactions, you're less likely to make impulsive decisions based on fear or greed. So, before you even think about placing a trade, take a deep breath, assess your emotions, and approach the market with a clear and focused mind. Forget the hype around secret signals and magic indicators. The truth is, the market is inherently chaotic. It's about finding opportunities within that chaos. Successful traders don't rely on luck or guesswork. They control their emotions and follow a system. We're talking about simple, tested strategies that they repeat consistently, day in and day out. They know exactly when to enter a trade, when to exit, and most importantly, they understand that risk management is king. Because trading isn't just about making money, it's about not losing it. So, take the time to develop a trading plan that outlines your entry and exit points, your risk management strategy, and stick to it, no matter what. Even the most experienced traders in the world make mistakes. They have losing trades, they misjudge the market sometimes, it's part of the game. But what separates them from the majority of traders is this. They know how to protect their capital. Protecting your capital means limiting your losses on every single trade. It means using stop losses, diversifying your portfolio, and most importantly, avoiding the dreaded overtrading. Every loss is a lesson, not a failure. It's an opportunity to learn, refine your strategy, and come back stronger. So stick around, because we're about to get into the nitty-gritty of what it takes to succeed in the markets. We've talked about controlling your reactions, sticking to a system, and protecting your capital. These are foundational, and they're going to set you up for success. But we're just scratching the surface here. The next few rules we're going to cover, those are game changers. These are the rules that most traders don't even know about, let alone follow. We're going to talk about patience, discipline, and the importance of having a clear trading plan. So if you're ready to take your trading to the next level, stay tuned. Let's address a huge misconception in the trading world that you need to be trading every single day to make money. This is absolutely wrong. In fact, some of the most successful traders I know are incredibly selective about the trades they take. They understand that not every trade is a winner and that sometimes the best trade is no trade at all. This brings us to rule number 1 of our game changers. Wait for the right opportunity. Don't force trades, don't chase the market, and don't feel pressured to constantly be in the action. Take your time, analyze the charts, wait for your setup, and only then consider placing a trade. The market can be incredibly tempting. Charts are moving, candles are forming, and it can feel like you need to be a part of every single price swing. But remember what we talked about in the last chapter, not every trade is a winner. Successful traders understand the power of patience. They don't jump into every trade that looks even remotely promising. Instead, they wait patiently for their strategy's signals to line up. They're not chasing every little move, they're waiting for high-probability setups that align with their risk tolerance and their trading plan. This patience allows them to avoid emotional decisions, reduce their risk, and ultimately increase their profitability. Remember, trading is a marathon, not a sprint. This next rule is crucial, so listen up. Overtrading can absolutely ruin your trading account. It's one of the fastest ways to deplete your capital and sabotage any chance you have of long-term success. Contrary to popular belief, more trades do not equal more money. In fact, it often leads to the opposite. When you overtrade, you're essentially increasing your exposure to risk without necessarily increasing your potential for profit. Instead of trying to catch every single market move, focus on quality over quantity. Remember, it's better to take fewer high-quality trades than to constantly be in the market, racking up commissions and exposing yourself to unnecessary risk. Let's face it, in trading, losses are inevitable. Even the best traders in the world have losing trades. The key to long-term success isn't avoiding losses altogether, it's about managing them effectively. This brings us to rule number 3 of our game changers. Accept small losses, but avoid big ones at all costs. Every loss is a lesson, an opportunity to learn from your mistakes and refine your strategy. The key is to not let those losses control your emotions, leading you to make even bigger mistakes down the line. This is where stop losses come in. A stop loss is an order that automatically exits a trade when it hits a certain price level, limiting your potential losses. It's one of the most important tools in a trader's arsenal, and it's essential for protecting your capital and staying in the game for the long haul. Greed. It's one of the most powerful emotions, and it can be especially dangerous in trading. When you're in a winning trade, it can be tempting to let your profits run, hoping that the market will continue to move in your favor. But greed can quickly cloud your judgment and lead you to hold on to trades for too long, turning what could have been a winning trade into a losing one. That's why rule number 4 is all about controlling your greed. It's about sticking to your trading plan, taking profits when they're there, and not letting emotions dictate your decisions. Before you enter any trade, you should have a clear profit target in mind. This is the price level at which you'll exit the trade, regardless of what the market does. By setting predefined targets and sticking to them, you remove the emotion from your trading. Remember, it's always better to walk away with a profit, even a small one, than to risk giving it all back to the market. We've talked about a lot of important rules so far, but this next one is arguably the most important of all. Because without it, all the other rules don't really matter. Rule number 5 is simple. Discipline is your greatest weapon in the trading world. It's about sticking to your plan, even when it's tough. It's about controlling your emotions, even when the market is testing your patience. And it's about not following the crowd, even when everyone else seems to be making money. Trading can be an emotional roller coaster. There will be times when you're tempted to deviate from your plan, to chase a hot stock, or to ignore your risk management rules. But it's in those moments that discipline matters most. Because it's easy to follow your plan when the market is moving in your favor, but it's much harder when you're facing losses. Remember, discipline is what separates the successful traders from the rest. Imagine this. You're about to go on a road trip. You wouldn't just hop in your car and start driving without any destination in mind, would you? The same principle applies to trading. Rule number 6 is simple. Never enter a trade without a clear plan in place. This means knowing your entry point, your stop-loss level, and your profit target before you even think about placing a trade. Your entry point is the price level at which you'll enter the market. Your stop-loss, as we discussed earlier, is your safety net. It's the price level at which you'll exit the trade to limit your losses. And your profit target is your ultimate goal for the trade. By having a clear plan in place, you remove the guesswork from your trading. You're less likely to make impulsive decisions based on emotion or fear. This next rule is short, but it's incredibly important. Never challenge the market. The market is always right, even when it seems irrational, even when it doesn't make sense. Remember, you're not smarter than the market. You're not going to outsmart millions of other traders, algorithms, and institutions. Instead of trying to fight the market, learn to respect its power. Accept that you will be wrong sometimes, and that losses are part of the game. The key is to cut your losses quickly, learn from your mistakes, and move on. Don't hold on to losing trades hoping that the market will reverse in your favor. That's a recipe for disaster. So, respect its power, manage your risk, and don't let your ego get in the way of your trading. Here's the truth. Most traders enter the market with one goal in mind, to make money. And while that's certainly a valid goal, it shouldn't be your only focus. Because the truth is, focusing solely on profits can actually sabotage your chances of long-term success. Rule number 8 is this. Shift your focus from making money to learning. Because knowledge, my friends, is profitable. The more you learn about the market, the better equipped you'll be to make informed trading decisions, so invest in your education. Read books, watch webinars, follow experienced traders, and constantly seek to expand your knowledge. Remember, the market is constantly evolving, so you need to evolve with it. Stay curious, stay disciplined, and never give up on your trading dreams. You know how I mentioned that some rules are so important they're worth repeating? Well, this is one of them. Because in the world of trading, patience isn't just a virtue, it's an absolute necessity. The market isn't going anywhere. There will always be opportunities to trade, to make money, and to grow your account. So take a deep breath, remind yourself that patience is key, and wait for those high-probability setups that align with your strategy. Trading successfully is about so much more than just making a quick buck. It's about building a sustainable, long-term approach that can weather any market condition. So, rule number 10 is this: think long-term, and avoid the trap of short-term greed. Instead of focusing on making as much money as possible as quickly as possible, focus on developing your skills as a trader. Focus on building a solid foundation of knowledge, discipline, and risk management. If you focus on the long game, on constantly learning and improving, you'll be well on your way to achieving your trading goals. Can you believe we're already halfway through our 25 essential trading rules? We've covered so much ground already, from mastering your emotions to developing a rock-solid trading plan, but we're not done yet. We still have 15 more game-changing rules to uncover, rules that will take your trading to the next level and help you achieve consistent profitability. We'll delve deeper into risk management, explore advanced trading strategies, and reveal the secrets to staying ahead of the curve in this ever-changing market. So, stay tuned, because things are about to get even more exciting. So there you have it, the 25 trading rules that can transform your approach to the market. Remember, trading isn't about getting rich quick. It's about patience, discipline, and constantly learning and evolving as a trader. Implement these rules into your trading and I guarantee you'll start to see a difference in your results. But most importantly, never stop learning. The market is constantly changing, so you need to change with it. Stay curious, stay disciplined, and never give up on your trading dreams. See you in the next video. Trade smart and keep learning.